Well, welcome back, everybody, to another edition of Market Talks with Dr. Stocks. This is Dr. Tom Carr, aka Dr. Stocks of drstoxx.com. That's drstoxx.com, your one stop shop for all things trading. Coming to you live today from the live trading room in Southwest Florida, which is where we live. And it's actually cold today. I'm in a t shirt, but that's because I just took a hot shower. It's about 58, 60 degrees outside. Everybody's bundled up, trying to survive this snap frost that we're having. It's it's the pain is real, guys. The pain is real down here in Southwest Florida when we're used to about 75, 80 degrees at this time of year. All right. If you are interested in joining us in an amazing community of amazing people who trade throughout the trading day together, and you're going to get all the picks that I am trading, my stock ETF options, micro E-mini trades. You're going to get my entry, stop loss, target price, reasons for the trade, all of that. If you want to join us, then click on the subscribe button, go down to the live trading room. In a couple of days, today's the 8th of January. On the 10th of January, we are tentatively launching our new live options room. If you're interested in joining both, there should be a bundle discount for you available, but I can't promise that because the site manager is still working on that. All right. So let's get over to, we're going to start off with some indexes. We'll take a look at the futures index. I wanted to introduce you to a new chart setup I have here. I've got 3 panels this time. And this is because the market, as you can see from this left panel over here, let me expand that. This is the S&P 500. And in recent trading, this is the daily chart. In recent trading, you can see it has been very, very squirrely. Let's just say that. This is this big day right here, big slam throughout the market day came in response to Jay Powell's remarks on the last FOMC meeting of the year. As he was looking ahead to next year, he suggested that instead of 3 cuts, 325 basis point cuts coming in 2025, it would only be 2. And he expressed some concern about inflation not coming down as fast as he wants it to. And that just unsettled the market. Now, to the good, some good news. The market did reverse quite quickly. We rallied back up. We got back about 70% of that drop. And then it was another straight drop right back down again. You can tell there is fear in the market about inflation, about a too hawkish Fed, which would then in turn raise recession fears. So those are the 3 biggies. Right now we're in a mode where if the market gets bad economic data, like we got a little bit of a miss, a downside miss today in ADP jobs created, new jobs. We had a upside miss in JOLTS yesterday. We had a downside miss in ADP today. And that actually kept a little bit of a bid in the pre-market underneath the futures contracts. So the market is looking for some weakness. We want to see weakness, especially in the job sector, and that's coming up on Friday. We get the December payroll number, we get the unemployment rate, we get the cost of labor, and all kinds of other stuff. So the market will look at those things very carefully. At 2 o'clock, by the way, in fact, it's already past 2, it's 2:30 right now. We had the FOMC report from the last meeting, and it didn't, well, it actually did move the tape. We're back up to new highs on the day. I'll show you that in just a minute. But not highs on the whole session, not the 24-hour session, but just highs on the opening hour session. And that's a good thing. So I guess there was nothing in the FOMC minutes that unsettled the market. Probably all of that has already been priced in. And if those minutes were hawkish and the market's still going back up, that is an excellent sign. Excellent sign. All right. So I was just explaining to the members of the room that we've had this day. Let me show you some of the 5-minute charts. And I'm sorry, I will get back to explaining my my new chart setup here in just a minute. We've had this day that looks kind of like this, right? Where the highs of the swings on an intraday basis, the 5-minute chart of the SPY, the highs are getting higher, the lows are getting lower. That's called price exploration, or you can call it an expanding range. Some people call it a megaphone pattern. But what that means is that there's a battle going on between the bulls and the bears. The bears have really been in charge of the tape for about 2 or 3 weeks, as you can see from this daily chart right here, right? From the JPOW, it was a soft rally, big slam down, a little bit of a weaker rally, and a slam down yesterday. The bears are feeling their oats, right? They're feeling like, hey, we can take this thing. We can take it back from this long-term bull market that we've had since October of 2023. Let's wrestle the tape back from the bulls. And then the bulls are out and they're saying, hey, look, there's some good value out there. There's some support underneath these dips. There are stocks that we haven't trading at prices we haven't seen for weeks and weeks. Let's go out and start buying. We've been on the sidelines for a while. Let's jump back in. So they start fighting between the two. Who's going to control the tape? Well, that pushes the highs higher because the bulls are jumping back in, pushes the lows lower because the bears are thinking they're really in charge. And that's where you get the expanding range. These expanding ranges tend to come at the bottom of pullbacks. That's what we've got, right? This is a pullback. It's not a real big one, but it is a pullback, right? Here's an uptrend, and here's your pullback. All right, so these expanding ranges tend to come at the bottom of pullbacks or at the top of uptrends. They don't always mark the exact top. They don't initiate a major pullback. Like you're not going to get a real big face melting rally from here on the basis of this little intraday pattern. But it is a good sign that that the bulls are back on board. Right? They've put themselves back in the ring, and they put on the boxing gloves, and they're ready to go head to head with the bears. All right. So that's a good sign. I like what's happening in the tape. You can see it as well in the Nasdaq 100. Maybe not quite as pronounced, but there is a nice megaphone pattern going on there on an intraday basis. All right, back to my charts. So I have the daily over here in the left panel. In the middle, I have the hourly. Sometimes I go with the 2 hour, most often the 1 hour. And over here in the right panel, I've got the 5-minute chart. Why am I adding this intraday look to my data? Because normally I only have the 2 panels, daily and hourly. Sometimes when I'm taking a longer view, it's the weekly and the daily. When I'm day trading, it's going to be the hourly and the 10-minute chart, something like that. But I wanted to have all 3 panels on here because we want to make sure we're in sync with the dominant trend, which is the daily chart. But we want to find these little intraday swings, highs and lows, off of support to go long, from resistance to go short in the major indexes, because we trade the Micro Emini futures quite a bit. And those that follow me in those trades, if they're not qualified for the futures, they trade the leveraged exchange traded funds, the ETFs. And you don't have to short those. You can buy the inverse one as well. And we want to catch, because of this volatility, because of the intraday swings up and down, we want to catch these shorter term moves as the market is trying to figure out what is the next major leg. I think we're going to get a near term leg up and then a longer term leg down by the time we get out to about the middle of March. I think the market still needs to price in a number of things, including Trump tariffs. That's a big concern as well for the market. Every time Trump takes the microphone, it seems like he's going to levy tariffs on every country out there. He wants to annex Greenland and China and not China, I'm sorry, Canada. And he's talking about really doing some good stuff with promoting American products. That's always good, but it may come at the expense of some conglomerates that are broadly based, right? Who are trying to do trying to trade with, trying to sell their products to China. And if China's got tariffs on American goods, then it may not be so good. And if China can't sell their stuff over here, then they may retaliate and not sell their stuff over here. So that needs to be priced in. And sticky inflation needs to be priced in. 2 cuts instead of 3 although I think that's mostly priced in, but that may now still need to be priced in. We've also got this several concerns right in the macro environment. We've got China. It's maybe falling into recession. Probably is. They're in a real problem right now. They have a deflationary problem. Their prices are coming down because their economy is shrinking and the workforce is shrinking, and they're trying to sell their bonds in order to raise cash to prop up the yuan, and that only works in very short term. They've been buying gold to shore up their economy, which is a very good thing for us because we're long gold, and I think everybody should be long gold. We're also long the miners, or one of the miners at least. And so we got China as a problem, Europe as a problem because Germany, France, maybe England falling into deflationary pressures, recessionary pressures, and the whole rest of the world not looking so good. In fact, the whole rest of the world, all the developed nations had a negative year, 2024. We had a nice big fat positive year. So it's nice to think that we're the first and the only game in town. That's good. But we also need the rest of the world to play along. And if they're not, then it's definitely going to be a headwind. We also, here's another issue, one last thing I'll talk about, and that is that we've got the very, very poor participation rate in the broader market. So we've got the Mag 7 at the top of the market, the 5, 6, 7, 10 stocks that are the biggest companies on the planet, and they're doing well, and they're driving the indexes higher. They make up 25% of the index. They're talking about the S&P 500, more than that for the NASDAQ. And the rest of the market, in fact, some really great names in the market are down near 52-week lows. They're trading below the 200 period moving average. They're just not in very good shape. And we need that to reverse. We need the mags, like Apple just got downgraded, Tesla just got downgraded, Microsoft is down near multi-week lows. Qualcomm is not having a very good quarter either. And so we need sort of the mags to cool off a little bit, and we need the rest of the market, especially things like biotech, small caps, home builders, banks, regionals. We need those guys to start catching a good bid. All right. So with all of that, all that volatility going on, all that uncertainty, all that needing to discount, I wanted to have a short-term view. We're going to use this setup here, the daily, hourly, and 5-minute chart to pinpoint some nice sorry for the barking, short-term reversals in the Micro Eminis, both the indexes. We can trade oil, we can trade gold, we can trade the 10-year yield, we can trade Bitcoin. We can trade the euro using these micros, and we want to pinpoint, maybe a couple hours, 3 or 4 hours of a nice little move, maybe an overnight trade as well. I mean, we're in gold and we're not going to sell it anytime soon, I don't think. So there are some longer term trades out there, but I'm just using this setup, the short term 5-minute for pinpointing the entry, the hour to determine short term trend, and the daily to determine the overall trend of the market. That's how we're doing this. That's how we're trading these days. It may change next week. I always say we trade one day at a time. We don't cling to any prognostication or prediction about the market. There are just too many variables to take account of. But it's all baked into the tape, right? Only price pays. All right, I just have been rambling. I'm sorry. Let's get down to some analysis. Let's go to the daily chart. Let's get rid of some of this stuff here. All right, so we already said that we've got this bull-bear battle going on. We are clearly in a pullback, and an uptrend is defined by higher lows, and a downtrend is defined by lower highs, and we certainly have lower highs here. So now, the good news is we are printing a bit of a flush out bar early today. Green candles so far. We're not at the close yet, but we are in the pink zone of an uptrending LRC. We're below the 50. We're below the 21. Not a good place to be, but a little bit of a little hope that we can reclaim and maybe even break out of this falling wedge. Right now, it's not looking that horrible, I have to say, for the S&P 500, but we need a couple of follow-through days, and we need to get back up above that black line right there. NASDAQ, this is a stronger index. And we also can see right here the pullback right there. And it's a little bit of a softer landing. We did not get below the 50. We did get below the 21, not below the 50. We bounced out this morning of the pink zone, and this looks to me like it's almost ready to go. Now, that said, there have been, like yesterday, we had a distribution day, which is a red volume bar higher than the previous day. We had one right there. 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 Right. These distribution days are a little bit of a concern. If they're not balanced out by accumulation days, then we're starting to see a negative volume balance. And that is the kind of thing that you typically see at market tops. I do think, I do think we are closer to a market top than we are to a market bottom. By that's just an obvious thing. And I do think quarter one is still going to be overall on the weaker side. But I think we're setting up here, possibly, I'd give it maybe a 55% chance of a rally on Friday on the jobs number and some follow through Monday, Tuesday, maybe Wednesday next week. And at that point, then we're probably going to have to look more on the bearish side of the market than the bullish. The Nasdaq, or sorry, the Russell 2000 small cap index has just not been good. So this is much more of a clearly defined downtrend, right? I mean, we could call it simply a pullback in an uptrend. That's the bigger picture, but this is not nearly as strong, and it's been longer in duration than what we just saw with the S&P and the Nasdaq. The good news, and it is pretty good news, is that we're well above the 200. We are building a sideways base, which is better than a little bit of a relief rally. Relief rallies do tend to roll back over like they print a bear flag and then you get another leg lower. This kind of thing where you get this sideways base after a long pullback, and especially where it's starting to get really tight inside the apex. Where are my hands? The apex of that pattern tends to not, maybe it's a coin flip, maybe it's a 50-50 chance, but it tends to not go down as often as it will break out to the upside. So it's a no-go zone as far as I'm concerned right now, but it's one to watch for a breakout. Gold is good. It's just up and up and up. If we get rid of that, you'll see a better pattern here. It's getting close to breaking that pullback. The bigger pattern is that there is a nice looking symmetrical triangle. We're moving off the lows. We've got very good volume balance. We regained the 21. We regained the 50 today. This looks good for a test of up here. And as long as China keeps buying gold, we should keep buying gold. And then we're good to go. So I'm a little sour on Bitcoin, I have to say. A little sour. Now, there's some possibility that, like the other indexes, we're coming into the end of this little pullback. But I have to say, I really thought when Trump won the election and him being very positive on Bitcoin, very pro-Bitcoin, appointing pro-Bitcoin people to positions of power, I really thought Bitcoin was just going to be up and up and up, and it hasn't. We got up to 103, 104 yesterday, and it was a big slam, and then it's another follow-through day to the downside today. The good news is we tagged the 50. We bounced a little bit. We do have some Bitcoin in our wealth building portfolio, which is our long-term portfolio, and we bought it several months ago, so it looks fine. But if you're looking to swing trade Bitcoin for an upside move, I would wait. I would wait and see whether we get some kind of a reversal to the upside. You've got the hold of the 50 today. That's good. You've got the bounce out of the pink zone. That's good. But you don't yet have any bullish indication here. So just wait on that. Oil is coming in really hard today, and it's a bearish engulfing candle. It's up in the blue zone of a downtrending LRC. This is a short. It's a short. However, and oil, of course, is always a good read on a recession. So if oil is rising, and it kind of has been for a couple of weeks or a month, then we can say the market is not that worried about recession. But it's set up right now to come back in. So your target is going to be right around 70. It's at 73.30. It's not really a trade as far as I'm concerned. I think there are better trades out there, but That is a classic reversal bar. I'm sorry, it is, yeah, it actually is a classic bar. You open within the range of the previous day, you travel north to take out at least 20 days of highs, and then you travel south to close within the range of the previous day. Classic reversal bar, bigger volume than yesterday, had a distribution day the day before. Not looking real good for oil short term. We want to see yields come down. They were actually red for the moment. And if you held your breath, you missed it. But a doji up here at the top after a nice strong run in the 10-year yield is a potential top forming. Not there yet, but that's what could be happening. All right, I want to do two more things before I take chart requests. I want to open up my my market surge trading tool and show you one of my scanners. So I'm a partner with Investors Business Daily, and boy, if I could pay out $1 for every trading skill I learned from William O'Neill, either directly from some of his webinars or indirectly through his book, I would not have much money left, because he really formed in my head a lot of principles that I've been using for 20 plus years of trading. His system is not perfect. There are ways of improving on it, and I feel like I've been able to do that for the most part. His track record as a fund manager was good, not great, right? He did tend to get a little too heavy when the market was a little too vulnerable on the upside. The only thing that I would kind of caution against in terms of imitating his system. But when you follow William O'Neill, you are looking for strong charts, you're looking for solid growth, you're looking for accelerating growth, you're looking for big margins, you're looking for price near 52-week highs, right? It's a buy high and sell higher kind of system. You're looking for new product lines. Um, you're looking for a strong sector, right? There are all kinds of ways in which he has honed his system and shaped the way I think about the market. Now, he's also not very good or very interested in buying stocks in a recovery phase. To me, that's where the biggest money is made. But beyond that, it's a brilliant his tool right here, this market surge, which incorporates all of his proprietary fundamental metrics and technical metrics, is very, very much worth the price. It's not that cheap. It's about $150 a month. If you want to try it for $50, let me know. I can give you a link. But it's I just can't trade. I run these scans almost all day, and I use them for my stock pick advisory letters as well. All right. So HubSpot was the stock of the day yesterday, and that is what brought it to my attention. Always pay attention to what IBD thinks is the stock of the day. Brilliant chart. Look at these metrics here. EPS rating of 99, doesn't get any better. Group rating A+, doesn't get any better. SMR rating of A, doesn't get any better. That's increasing sales, expanding margins, and return on equity. That's your moat around pricing power. And when you've got an A, you've got a winner. Accumulation distribution, A-, that's very good. Comp rating 99, doesn't get any better. Timeliness rating, that's your entry, technical entry, is A, doesn't get any better. It's just absolutely off the charts for metrics. And this is a very, very nice looking chart, right? You had the breakout, you had a little pullback, you had a breakout, you had a pullback, you had a breakout. And then with the market, as the market's crashing on Jay Powell, we had a soft pullback, a soft multi-week pullback into the 50-period moving average, a nice high tide base cluster right here. And when the market's a little bit mixed today, it's actually nice and up. We are long HubSpot. We just got long today in the live trading room, and I really like this. And this also showed up on my A-list scanner. So A-list scanner today is bringing in 27 items. Let's go through like the first 5 or 6 of these and see if we can pull out maybe another beauty like HubSpot. So networking play Arista is not a very exciting play right here. I have to say it does a lot of sideways action. but 52-week high, maybe all-time high a few weeks ago. Soft pullback into the 20, tested the high again, tested the 20 again, new high just 2 days ago when the market is down near the 50-period moving average or below. Arista is printing a new all-time high and a nice looking trade here. This is a kind of a safe haven, I would suppose, in terms of this chart. Absolutely perfect metrics. And it's kind of a buy and hold, not really a good swing trade, but it's a nice looking longer term investment. Archrock is oil and gas. So it's the good kind of oil and gas, the exploration kind, or the suppliers, right? The picks and shovels. When the economy is booming, energy expenditure is very strong, and you are going to need some picks and shovels, and that's what this company supplies. And I don't know, this is not such a good chart. You've got the double top, looks a little bit on the bearish side, ready to come back in again, and a relative strength of 90 is not that strong, so I would wait on that one. DOCS, this is a power gap play. It's been on my power gap list for quite some time. It gaps way up on earnings. It did come down into that gap, but did not close it. That's number one sign. It tested or came close to testing the gap day highs. That's also a good sign. And we're right now somewhere in the middle of the range. This is the buy. You can just buy this right now, buy it and hold it. Put your stop, I would say, at around 51.80 and ride that for a new breakout, which should be happening fairly soon. 4 is a little bit of a riskier trade, tends to move a fair bit, but very good fundamentals. This is like another PayPal or Shopify kind of play. And you've got this nice line of lows that are holding very clearly in a upward angle. And you've got a nice top where it's starting to consolidate. We've got a good hold of the 20, which is above the 50. The 50 is above the 200. We've got the stacked MAs. Everything looks great. This is a good buy as well. And let's do one more. Google. Google had a big day yesterday, and then it could not hold the highs. It tested the 201.42 all-time high, pulled back in, closed red yesterday. A little bit of a downside follow-through, so it's not really a buy here. A double top, always good to wait a little bit on double tops. All right, that's all I wanted to do with that. Let's get over to my greens and reds list. I won't do all of these. Let's just do the worst to best. HIMS. So this is a one from the IBD top 50, might even be in the top 20 or so. So very good growth, accelerating growth. We're waiting for this to break out. So it's not a buy until it does. It's not a buy until it gives us a good green candle, bigger volume than the day before, and pushing out of the pink zone. So it's a wait and see. Not there yet. LIT, which is, I think they do lasers or something like that. Anyway, testing the 50-period moving average today. Pink. It's a pink zone set up in an uptrend, but it's still in short-term downward movement. So we don't want to buy it today. We want to wait. TSM, big gap up, power gap, really big gap up, came back in, closed the gap today, and I've been kind of keeping half an eye on it to see if it's going to reverse and give us a good buy signal. If we go down to the hourly chart, maybe we can see this a little better. And it's not there yet. Just not giving us what we want to see. Nice potential of a rounded bottom here on this pullback, but we want to see a big green volume coming in. We want to see a good green candle. We want to see some of these intraday highs get taken out, and none of that's happening. So not there, not ready yet. I put this coal play on. This would be a recovery play. I'm thinking that coal has a good bid from the new administration coming in, which is going to be more, I assume, more favorable to fossil fuel type energy sources. And this is a big and, there was a lot of call volume coming in today. Very unusual call volume with time and going up to like the 20 strike, the 23 strike, the 25 strike. So somebody clearly likes this play down here in the pink zone of a long, long, long and very consistent downtrend. For my money, it's not a buy until I start to see some good bullish volume coming in. We're not there yet. I just wanted to put it on my list to keep track of it. Let's take a look at, let's do just a few more. Shopify, I like this. It was a gap and crap yesterday with a lot of the market, right? NVIDIA, way up on the CES presentation, way down by the time it closed. But I like this little green candle today. I don't know what the volume is just yet, but it is testing the 50, the pink zone. This is a power gap extraordinaire because it really gapped way up on earnings and didn't come anywhere near to closing that gap. And it's just been staying up in this new range. Now we're at the bottom of that range. Very, very good place to buy it. I like it as a buy right here. Okay, ONON is a retail play. Not bad, right? You've got the bullish divergence. You've got uptrending LRC. You've got the test of the pink zone today, the 50-period moving average. You've got a reversal back up. Volume is not quite there yet, but let's keep an eye on this one. This does look good for a good setup, and the big test will come when it tries to break out of that. CRM, this is we are long CRM in the room. It hasn't been performing for us just yet, but I'm hopeful. We have an inside day bar today forming at the bottom or just outside the 2.0 standard deviation. We are below the 50. We're below the 21. That's not where we bought it. So we bought it up here above that little reversal candle there, inside day bar. I thought that was the one. Sure looked good, but it wasn't. And we've had some downside pressure with the rest of the market. Another inside day bar today. Let's see if we can close green. Maybe. I mean, it is green on the day, but let's get a green candle above the open. LRN is the stock of the day today for Investors Business Daily, and you can see why. It was just added to the leaderboard. And this is what we're looking for, right? When you see this pullback, and then you get a nice looking reversal bar with lots of good price action. Volume's not really coming in yet, but I don't think there's a whole lot of volume out there today. I think we're below volume all around. I like this. 112 is going to be your first test. It's at 109 right now. And then ultimately, this should springboard out of this rounded bottom. Two things we like about this pullback. One is that it's soft, right? It's at a very low angle. I don't know what degree that is, but 25-degree angle, something like that. And the lows are forming this nice rounded bottom. That's perfect for a breakout. So your target is going to be up here in the blue zone around 127, 128. Let's see. Wix was stock of the day for IBD last week, at the end of last week, and hasn't really broken out yet, but it sure looks like it wants to. And it's been very strong when the market has been weak, right? This is a power gap, right? Gap up on earnings or on good news that never closes that gap. That's a power gap, forming a nice high tight base. Ideally, you want to buy it down here at the lows. We're now up at the highs. So it could just roll back over and come back down to the lows around 215. That would not be a lot of fun. But as a breakout play, this looks quite good. Volume, recent trade has also been good. Big distribution day yesterday, but everything had that yesterday. One last one I'll show you. GMed is a medtech play. I have my trend trade letter members in this one. We've been in it for a while since that little reversal bar right there. It's done very well for us. And today is moving day, breakout. All right, if the market does start to turn south again, we'll head over to my Reds list. There are a few plays on here that looked very, very good after yesterday's close and have now followed through today. So not really, I mean, it's a little late to get on board these. So classic relief rally setup for me is that you've got a downtrend confirmed with either the moving averages or the LRC. You've got the overbought stochastics, and you've got a red candle. That's what we had yesterday. Didn't get the volume that we want. So anyway, there's that. That's SMCI. Solar play, 3-bar reversal. Big stretch up to the blue zone and a downtrending LRC. Tagged it, reversed back down lower. Now that was up on a down market day, so that's a bit of a bullish divergence, but then no follow through today. We're right back down again. And that 3-bar reversal on overbought stochastics in a downtrend, that's just, short me, short me. It just says that all over. Short me, short me. PLTR, this is not in fact, it's not a classic short in that sense, and it's not a short today by any means. In fact, I wouldn't kick anybody in the pants for buying it. But up here was where it landed on my Reds list. I'm going to take it off here in just a minute, but it hit the blue zone, reversed lower. It got a downgrade. It got a couple of bad press. There was a lot of put flow coming into the name, and then a big follow through bar yesterday and a gap down today. So it hasn't filled that gap. Doesn't look like it's ready to go just yet. We'll see if it can reverse back higher on Friday, and it probably will. But I'm going to take it off my list here in just a moment. Well, let's just take a look at a couple of others. Wayfair, you've got the overbought stochastics. This is a flat LRC, so it's not really a downtrend, but everything is below the 200, so it is long term in a downtrend. This Chewy looked pretty good as a potential short, not because it's in a downtrend, but because it got up into the blue zone and then printed all this bearish divergence. That led to the big red stick today that has rallied back up with the market. Yeah, we're still in somewhat rally mode off the lows. So it's not really a short today. It was more like an overnight hold, but anyway, there's that. Oh, UNH is a short, but it's not giving us a short entry. So everything is set up here to roll back over and fall probably into earnings or after earnings. But it's not a short until you get the signal. We don't have the signal. Signal is going to be a red bar with higher volume than the day before. But everything is in place. You've got the 21 below the 50. You've got, and the 21 is below the 200 too, for that matter. You've got a downtrending LRC. You've got this big, strong, sharp waterfall cascading sell-off and a weak rally on lower volume into the 21 period moving average. All we need here, we've got the overbought stochastics too, of course. All we need is a red bar on higher volume than the day before. Now, this could be a recovery play. It could just keep going higher, and that would be great. It'd be great for the overall economy. But it is set up now, in the absence of a sell signal, it is set up to roll back over. All right, guys, I'm going to jump back over to the main room and see what you guys are interested in. So if you please, just one ticker symbol per person. And I will take the first one that I see there, which is GEV. So this is the spinoff of General Electric, and it is adapted to the, correct me if I'm wrong, adapted to the energy demands for data centers. Is this the one I'm thinking of? Anyway, whatever it is, doesn't matter. Let's just look at the chart. So we had a nice gap up a couple of days ago. We had a pretty good hold given the market yesterday, which was a big slam down. And we closed the gap today and rallied back up with a green bar on pretty good volume. Now that breakout day was also very good volume. So this is good. Now you do have all this massive bearish divergence working in here, but just keep in mind bearish divergence, these bearish divergence signals, bullish divergence signals, very short-lived. They may simply be printing the next candle and that's it. 2 or 3 candles is sometimes all you get with these divergent signals. They're worth noting, but not necessarily, unless you have all kinds of other reasons you like the trade, not necessarily worth trading on just that signal alone. But it does signal that it does tell us that it probably needs to work off some of that overhead resistance. So I don't see it going past 376 or so anytime real soon. If it does, I would be very surprised. It also has earnings coming up in a week or so, couple of weeks. About a week. But I like what it did today. I like that it tested the pink zone, rallied back up, is giving us a green bar, pretty good volume, above average volume. and it's just going to be a little tough to get up to like 380 and beyond. Once it's back up there, it's at 377 or so. Once it's there, it should slowly but surely give us a nice looking upside run. Keep in mind that Gev has had a really nice run. That's a beauty run right there. That's a beautiful run. Then it went into the sideways consolidation for quite a long period of going nowhere, and that's going to be very frustrating if you're in that. And that suggests that up in this area, it got overvalued. So the big gap up is also positive, like it's a new valuation. Anyway, we'll see. It's if you're long, it's a hold. If you're not yet long and thinking about buying it, I think I'd wait a little bit and just see if it can get back up above 376. Certainly see some worse charts out there, that's for sure. All right, you've got a bunch. NVIDIA. All right, the action NVIDIA today, not good. So big gap and crap yesterday. Huang was out doing his best to generate investor interest, but I think when he came out and he said two things about AI, that it's going to be a while before it's profitable, and 10 years or so for the computing part of it. And then he also said that AI itself probably has a 10-year shelf life before something else surpasses it. And so both of those were kind of two negatives that the market didn't really like. It was a big gap up. We were able to get out of our NVDL for a nice 22% rally or 21% profit in 2 days or something. And it was all downhill from there. We put on yesterday looking to play a little bit of a bounce off the 50-period moving average. We put on some lotto calls, and they didn't work out either. So it's an avoid for me, guys. It is an avoid. And I would suggest that line right there is very vulnerable, right? It keeps getting tested. I know that highs are getting higher. That's a good thing. But it won't take much to break through that and then come down here and test 128 or so. And you don't really want to be in a long if that happens. BLK. All right. So, yeah, when it comes down like this, you've got this cascading waterfall, right? Here's your dead cat bounce and then back down. You're going to get another dead cat bounce and then back down again. You have to figure out, you've got earnings in the mix there as well. You have to figure out, why is this stock behaving so poorly when the NASDAQ, the S&P 500, the big mag stocks are all up here inside the LRC, just above or near the 50-period moving average. This one's well below. Now, if you want to play this as a mean reversion trade, that's a different story. But boy, those are tough. I have a whole trading manual that is devoted to that setup. It's one of my favorite setups, but I haven't played it for a while. You have to have a market where you get a lot of volatility, big moves up and down. We haven't had that. We've had a low volatility market, right? The VIX down below 15, 16, 17 most of the time. If we get VIX back up above 20, we'll start to see some of these mean reversion trades open up. So you want to make sure, here's the thing with the mean reversion. You've got well below standard deviation. That's good. You've got distance away from the mean. The mean is typically the 21-period moving average. It could be the midline of the LRC, but I think in this case, it would be the 21. That's your target. And we want to see a buy signal. In other words, bulls are jumping back in. We don't have that yet. Had a big distribution day the day before. We had a very weak little hold day. It's not even a bounce. It's a hold. So wait till you get a green bar on bigger volume than the day before. That might come Friday, and then you can jump in. You put a stop below the lowest low of this pullback, and your target would be the 21-period moving average. All right, so this is a cybersecurity play. I actually did a long time ago, several years ago, when I was publishing a tech-focused newsletter for another company, not my own. This was on my list, and at that time, it was doing really well and kept going higher and higher and higher. And then all the competition started creeping in, and it kind of lost its mojo. Now, there are a couple of things going on here. You've got a flat LRC. You've got the stacked not quite the stacked MAs, but at least the 21's above the 50. So near term, it's in an uptrend. And you're getting this kind of like a cup and handle, right? Here's your cup, here's your handle pattern. It's not yet in breakout mode. Recent volume has been good, so I like that. Um, yeah, I think I would rather in this kind of market, I'd rather see you buying something that is in a confirmed uptrend, pulling back to support, pink zone, 2150, those kinds of things. This is more of a potential breakout play. I don't know. I don't know if I see it. Don't know if I see it just yet. Now, I do like the fact that it's been doing well in with the market coming down. So that's a big plus. When the market starts going back up again, this one should do well. But I suspect you're not going to get past the 200. It didn't get past there yesterday. And might have some trouble. Beware of the gap and crap. So if you're not long already and you think, oh, I'll get long on Friday and it gaps up, no, don't buy that. Don't buy the gap. If it gaps down, maybe. Okay. And if you really want to get in, I would get in today because I think today's probably going to be your best bet for at least getting that gap up on Friday. You can shave off some of your shares, take some profits, move up your stop, and hope for the best. But it's a I don't know, maybe a 55% probability that you're going to get a good swing out of that. FCX. So this is a mining play, and I think it's kind of a multifaceted mining. And miners in general have been really lagging the shiny metals. Although silver, and I think FCX does a lot of silver, copper, other things. Silver's been not nearly as happy as gold. Gold has not only the luster and not only the much more what do you call it, limited supply, but it also has China buying it hand over fist. So that is a big helpful thing for gold that silver doesn't have. Also, silver is a bit dependent on the home building, construction industries, because silver is used in a lot of compounds in home building, and if homes aren't being built, silver's not much in demand. But I like what it's doing today. I have to say, this is the kind of chart I like for a recovery play, not a pullback swing in an uptrend, but this is more of a the bottom is in and it's not going any lower, so let's load up the boat kind of setup. Now, it's showing me that it's not quite ready for that. I like the move today, but man, there's a lot of distribution going on right there. Sometimes, it's not always easy to tell when this happens, but sometimes this heavy bearish volume down at 52-week lows, that's probably what this is, or close to it. Heavy bearish volume, 52-week lows, everybody is getting out, everybody's selling, and then suddenly it just rallies right back up again because there's nobody left to sell, right? All the people that don't like the stock, all the short-term traders, all the short sellers, they're all done. They've done what they wanted to do. Now, if there's nobody left to sell, the market can only go higher, and that's maybe what's happening here. It's not giving me much yet. There are earnings. I would wait until after earnings. In fact, to be safe, I would wait until it recaptures the 21 and then breaks out of this falling wedge. That's my best advice. GEO, we'll do a couple more here. GEO. All right, so this is a very strong chart, momentum chart. Here's your power gap on earnings. That's always good, right? It's a reevaluation. The market is saying you're no longer a teenager. You're now worthy of the upper 20s. And that's where it's been trading. This is a nice looking rounded bottom. Breakout today on better volume than the day before. All this is good. It's a good breakout play. Now, I don't know how well the market will sustain breakouts. I don't know the company. It's a REIT. It's a REIT. Okay. Well, this does look good, I have to say. Very strong. Nice rounded bottom. Nice, soft, high, tight base. Breaking out today for the first time. Yeah, I like it. I like it. I've been very wary of trading breakouts in this particular market because I do feel like you get a lot more false breakouts these days than true ones. But this has all the earmarks of the real thing. So I would say I wouldn't buy it today. I don't like to buy big green sticks. More likely, you're going to be able to get into the price closer to 29. You know, a dip below 30 is probably where you can get a better entry. But if you are long, hold those shares. And if it does dip down, you can add a little bit more. You can take off a little bit now and buy those shares back if you want to kind of trade it tightly like that. But you would want to keep your stop below the 21 period moving average and then trail it up from there. I like that breakout. That looks to me very good. All right, so this one was on the IBD leaderboard for a while, and then with all of these cracks below the 21 period moving average on heavy distribution, they took it off. They kind of streamlined it. They said, "Oh, it's a 3/4 position, then a half position, quarter position. It's gone." Every time it had one of these big red bars. So yeah, this doesn't look that great. I like the bounce back, the hold of support, but this is to me looks like a very toppy kind of pattern. Right? It's a range. It's a trading range. We're down at the bottom of the trading range. That's not a bad place to be. But these big red sticks, I know the market's been doing some of this too. But these big red sticks, heavy volume, it's just not giving me that buy me vibe. So it may be as a short-term swing. You get a little bounce back up to 24. All right. If you want to play that, that's fine. If you're already long, it's worth holding on to it. If you're already long, you'd put your stop below 22.50. But I don't really see it as a screaming buy right now. Although I know this is in the same sector as APO, which has been really hard hit, as KKR, which is actually doing pretty well, all things considered. It's a strong sector, good, strong companies in there, but I'm not so sure this one is the best choice among the rest. Let's do energy real quick. I know I have a quick read on this, which is bearish. Yeah, every time I try an energy play, and we made some money on oil a few days ago, but I've been out of XLE, ERX, Gush, all through 2024 after making several stop outs, and I just haven't had a very good read. So here's the thing: you've got this long cascading downward spiral, death spiral from the blue zone to the pink zone, and a flat LRC. There's no trend there at all. You've got the inverse stacked MAs, and you've got this relief rally now back up on overbought stochastics into the 21, ready to roll back over again, I'm afraid. Now, it's been in a downtrend, right? Since hitting those highs there, it's been in kind of a downtrend for a while, and then it broke out and then right back down again. Energy, of course, is a good read on recession fear. And if the market feels like recession is coming because the Fed is too hawkish, they can't get rid of inflation, they might even raise rates again, you're going to see a big crack in the energy sector. So I don't know, it's just a little too vulnerable for me, and I don't like that setup. I know it's a strong bounce back. That's a good thing. Volume also very good on that relief rally, but that's just too vulnerable for me. All right, guys, I'm going to let you go. Have a great rest of the day. I'm going to record or produce this video, get it over to the YouTube channel, and I'll join you back in the room in just a little bit. God bless everybody. Have a great rest of the afternoon. See you in the room in just a little bit.